Welcome to another interesting section on how to invest in banking stocks. This is Coach Oge platform, and if this is the first time you're visiting my channel, kindly hit the subscription button and turn on the notification bell because I have decided to give you loads of content on this channel. So today we're going to look at Access Bank. So people have been asking me after watching my video on Fidelity Bank. So whether Access Bank is actually a buy or whether Access Bank is undervalued, overvalued, or fairly valued. So here I'm going to show you the real numbers and help you take decisions. So meaning that I'm going to show you how the financial position of Access Bank is right now. Now, everything I share with you right here is based on my own personal opinion, but then I think the numbers would also help you see the pros and cons of investing in Access Bank and whether there's an opportunity in the bank or not. You most likely see them at the end of this section. So here I'm going to carry out two types of analysis. I'm going to carry out a detailed fundamental analysis of Access Bank using their 2023 financial statements. Remember, we are investing, not trading. And then we're now going to be looking at the technical side Access Bank shares by looking at the charts. But here's the interesting part. On Nigerian Stock Exchange websites, where you can actually invest in all the ongoing bank public offer and the one that's actually coming very soon. Access Bank is actually offering a right issue of 19.75. This is it right here, and it's going to close in August, 19.75. But then what is the price of Access Bank in the market? Access Bank is currently priced at 19.40. So you then wonder, why is the right issue more expensive than the market price of the bank? Well, the bank had actually released a statement and they've said it in the statement that Access Bank is considered undervalued. So I think that's their own projection. That's what they think. And for me, I don't know why. The reasons are actually best known to them. But for you as an investor, you really don't need to know whether the market price is more than the right issue or right issue more than the market price. First thing you want to check is whether Access Bank is grossly undervalued at either 19.75 or 19.4. So that's the first thing you want to know. You need to look at your estimated fair value. What's your projection on Access Bank shares before you decide to go with the right issue? If you already own shares with an Access Bank, or you go with the market price if you do not own, if it is the first time you're buying Access Bank, but you want to consider adding it to your portfolio. So in this video, I'm going to show you everything you need to know about Access Bank and how the bank has fared, and then some of the numbers and what they say about Access Bank. And then I'm going to say that share this in line with my guide, what I used to analyze Fidelity Bank. So like I told you before, I'll try as much as possible to see how I can talk about banks that are coming up to raise money, and then the one that you most likely be paying attention to, the one that are grossly undervalued, and the one you should most likely be careful. But then I'm not going to demarket any bank. My point is, I'll tell you the numbers, and then it's left for you to take buy or sell decision. So here's a disclaimer. Now, the ideas shared in this video are based on my personal research and calculations. Please note this is important. Whatever I share right here are based on my personal research and recommendation, and kindly do your due diligence before you invest in this company's stock. Now, also note something that the stock market comes with a lot of risk due to uncertainty. So please, whatever you do in the stock market, please make sure that they align with your risk profile, and please vet whatever verdict, whatever comments I'm going to pass based on your personal risk profile. If you're a risk-averse investor, please do that. If you're an aggressive risk taker, please also align with it. But then my job, like I said, is to show you the numbers while you take your buy or sell decision on the stock. So here's what you're going to learn in this video. It's going to be a detailed course. It's going to be a detailed breakdown. So, and I think that if you want to invest in Access Bank, or you're serious about investing in a company, then you should be ready to see everything, or take your time to watch this video, because at the end of the day, you won't likely find value in this video. Don't just rush to take buy or sell decision. One of the problems I noticed in the market before now is that people like to trade or invest based on hearsay. And I think that was why they lost money in 2008. So please, if you're going to invest in any company, take your time. That 30 minutes, 1 hour time, 1 hour you're going to spend to watch a video or watch a guide from any coach or anybody you know would save you a lot. People are always in a haste looking for the next hottest stock without taking their time to do their due diligence. So that's why I don't rush my video. I make sure I break it down by numbers and show you. So if you're serious with investing in a stock, then you should subscribe to my video because that's what I do. My video is database. My video, I like to work with data. I like to work with numbers so that when I show you what a company financial is saying, you most likely see the facts behind the figure. So first thing is, what type of business is Access Bank running? So we're going to learn the type of business Access Bank is running. Is Access Bank a loan business, investment business, or hybrid? I already explained this in my previous video on Fidelity Bank. So I will drop a link to watch that video on Fidelity Bank if you miss it so that you can learn more on what kind of business banks are actually doing and how to know whether a bank is actually a loan-driven business, investment, or hybrid. And then the second one is we're going to look at how Access Bank generates funds. That's key. Access Bank generates funds. Does Access Bank generate most of its funds via deposits or debt? We'll look at that too. And then how is Access Bank making its money? Is Access Bank making money from interest or fees and commission? We'll discuss that. And all this, I will tell you the implication. And then is Access Bank really profitable and efficient? That's key. That's a core question you need to ask yourself. Is this bank really profitable? You don't want to just categorized as a bank and then assume that it's going to be making money like other banks. So you need to punch the number and know whether the bank is really profitable. And then there are things I'd like to look at. We need to look at the cost of funds of Access Bank, and then we're going to look at the net interest margin of Access Bank, and as well as the expense to income ratio, which is the efficiency. So we need to know whether Access Bank is really efficient. Then we'll look at the customer confidence. Is customer confidence growing or reducing? That's key. I know when I discussed that of Fidelity Bank, I share the importance of customer confidence because when customer confidence continues to improve on the bank, it will definitely reflect on its total deposit. People want to keep money with a bank they love or they trust. If they don't like a bank, they take their money out. So when you look at the trend of customer deposits over time, that also says a lot. So don't always ignore that part of a bank statement. People just focus on profit before tax, profit after tax, earnings per share, dividend, that's all. But you forgot that the number one thing is customer confidence because when customers decide to take their money off a bank, that's even the end of that bank. So make sure you look at the customer confidence, very important. Then the final one is the fair value of Access Bank using PE ratio. So I'm going to look at my estimated projection of Access Bank. And if Access Bank is able to meet up to certain metric or certain projection, then I think their share price should rally to a particular extent. And then I'm going to look at that from the PE ratio side and also using technical analysis. So while you are thinking of whether Access Bank is a buy or not, by looking at this breakdown, you would most likely be able to take a buy or sell decision on the bank stock. Like I told you, my job is to show you the numbers, and then why yours is to know whether it fits into your risk profile or not. Like I'm not doing this video to demarket any bank. My idea is just to tell you whether a bank, what the numbers are, and then you take your buy of the sell decision. If a bank is not good, I will not tell you it's not good. If a bank is perfect, I will not tell you whether it's perfect. My own, like I said, is to tell you the numbers, and based on the numbers, I will then share my own comments. So let's start. Now, what type of business is Access Bank running? This is very, very key. What type of business is Access Bank running? When you want to ascertain the business of a bank, now pay attention to the customer deposits. How do you know what a bank is doing? It's easy by looking at how they use your money. It's simple. When you go to the bank to deposit money, you need to ask yourself, what exactly is this bank doing with this money? If a bank is actually giving most of its money out as loan to businesses and other customers, and then the remaining one they are keeping it or they are investing it in securities like bond, treasury bill, then that bank is a loan driven bank. But if the bank is investing the bulk of your deposits in treasury bill, bond, commercial paper, private placement, then that bank is an investment-driven bank. So what I do is to call up the total deposit of that bank. So here is Access Bank financial statement right here. So what I need to do is to call up the deposit of Access Bank. So right here, look at the deposit. Now we're looking at Access Bank results um, in 2023 versus 2022. So this is Access Bank financial statement. Now, this is a liability. So under the liability, you find the deposit of Access Bank. So here I'm looking at two deposits, deposit from financial institutions and deposit from customers. Deposit from financial institutions and deposit from customers. So when you add these two numbers together, they will give you the total deposit. So right now, Access Bank deposit as at December 2023 is 19.7 trillion. That's exactly what Access Bank deposit is. And then when you look at the trend of Access Bank deposit, you will see the improvement in customer deposits and deposit from financial institutions. Customer deposit moved from 9.2 to 15.3 trillion. You can see here. And deposit from financial institution moved from 2 trillion to 4.4 trillion. Like I told you before, deposit helps you to check customer confidence. If it continues to increase, then it's positive. So here, access bank total deposit is 19.7. Now, what is the loan exposure? Loan exposure is 8.9. How did I arrive at 8.9? When you go back to Access Bank financial statement, you will see right here we have loan and advances to bank and also loan and advances to customer. So when you add these two together, 8 trillion and 880 billion, then it will give you 8.9. So that's the total loan exposure of Access Bank. And there was the investment securities of Access Bank. Now, the investment securities of Access Bank is where you look at the investment that generates interest income. So here you see an investment like here, we are saying 5.342. So here you can see the investment securities of 5.3. That's investment of Access Bank. Now, from this deposit, how much is the bank giving out as loan? So that is what loan to deposit ratio, which is around 45.1%. The investment to deposit is 27%. So it means that Access Bank is tilted towards loan business. So Access Bank is a loan-driven business, but their extent of loan exposure is not as deep or as expanded as Fidelity. So Access Bank loan exposure is 45%, Fidelity is 77%. So that means Fidelity is into loan more than Access Bank. But then when you look at it in terms of figure or absolute figure, Access Bank will be more. But then I'm looking at it in terms of percentage. That percentage helps you to look at how intentional the bank is when it comes to investing in loan business or investment security. So Access Bank overall is an investment, thought it's a loan-driven business. But then I'm looking at the percentage here, 45%, that's below 50%. That's below 50%. So meaning that the bank needs to top up its loan to deposit ratio. Very, very key. Loan to deposit ratio. Access Bank needs to show up loan to deposit ratio because CBN loan to deposit ratio as at 2019 was around 65%. But I realized that they have reduced it to 50%. But then Access Bank is still below loan to deposit ratio. So Access Bank needs to show up its loan to deposit ratio. Investment is 27% more than that of Fidelity Bank. So meaning that Access Bank is intentionally investing in securities more. That means they are actually exposing pushing more funds to treasury bill, bonds, and every other related risk-free assets. So, but here, Access Bank is generally a loan-driven business, but then a little bit into investment with this significant exposure because 27% is significant from my perspective. So we've established the business of Access Bank, and that's a loan-driven business. Now, why is that important? When you know the business of a bank, you can easily identify the risk that the bank is exposed to, credit risk, interest rate risk, and all that. So this is what you need to know. Then the other part is, how does Access Bank generate funds? How does Access Bank generate funds? Banks don't just make money from deposits. Banks also issue debt instruments like commercial papers, some of them euro bonds. So you need to know how to generate this fund. Why is that important? The reason it's important is that there are kind of sources that are expensive compared to the other sources. So look at this now. Total deposit of Access Bank is 19.7 trillion, which is fine. Now, total debt instrument is 2.4. Now, automatically, it shows you that Access Bank generates most of its money from um, customer deposits. That's clear. Now, it is not about whether it's customer deposit or debt instrument, but then which of them is cheaper? Which of them is extremely cheaper? Now, we call it the cost of fund. Call it the cost of fund. So if you go to Access Bank financial statements and then you look at the interest expenses, when you borrow money, you're supposed to pay interest on that loan. So that is the interest expense head you see right here. Now, this interest expenses covers what the bank is paying you as a customer on the deposits you have with them and what they are paying their debt holders or creditors. So I like to break this down to see where the bulk of the money is coming from and what the numbers are saying. Overall, interest expenses increased from 467 billion in 2022 to 958. So let's look at note 8 to establish this particular fact. Let's know where the number is coming from. So I'm going to drill down to note 8 on Access Bank record. So we're looking for note 8 right here. So let's look at note 8. Okay, this is note 10. Note 8 should be up. Yes, this is note 8. Now, look at note 8. You see, this is the interest expenses of 958. Now, this will tell you where the bulk of the money is coming from and the breakdown. Now, from this, you see the money paid to financial institutions on the deposits they have with Access Bank is 320. The money paid to you and I as a customer is 505. I can see here debt instrument issued, lease liability and interest bearing borrowing and other borrowed funds. Now, can you see this is very, very important? Now, let's now look at the breakdown here. Cost of fund is the amount that the bank is paying on the debt that it's carrying. That's the interest it pays on debt it carries. And the debt of a bank could be the total deposit, which is what you and I pays into the bank, that's paid into our savings account, current account, or fixed deposit. And then the debt from other current credit holders like bond, maybe the bank can sell bond, like private bond or corporate bond, commercial papers, and all that. So when you now compare the interest on that particular deposit with the deposit itself. Now, cost of deposit is 4.1%. That means if you compare the interest the bank pays, that's 320 plus 505 right here, divided by total deposits here, that will give you 4.1. Now, when you then look at interest it's paid on in debt, which is what? Here we look at debt securities issues 51 and interest bearing borrowing of 79. So when you compare that with the total debt of 2.4, that will give you 5.2. Now, what does that mean? It means that it's more expensive to issue corporate bond, euro bond, commercial paper than to raise this money via customer deposit. This is the reason every bank will want to push their marketers to raise as much fund as possible. This is the reason banks are pushing their customers to want to deposit more. They want to invest in promo. They want to push their marketers, give them targets. Why? Because it's cheaper to raise funds via customer deposits than to issue debt instruments. So cost of fund of Access Bank is 4.1 for deposit and 5.2 for debt instruments. So the bank prefers customer deposit, just like every other bank too. Now, how does Access Bank make most of its money? As a bank, when you understand the type of business you run, then I should be able to know where most of the money should be coming from. If you tell me that you are a loan-driven bank or an investment-driven bank, the bulk of your money should be coming from interest income. In short, if it's a loan-driven bank, the bulk of your money should be coming from interest on customer deposits. Do you understand? That means when I buy interest on customer deposit, it means that the interest income on the loan you have given with customer deposits. That's what it means. Now, if the bulk of your money is coming from fees and commission, and you're a loan-driven bank, there's a problem. If the bulk of your money is coming from fees and commission, and you're an investment-driven bank, there's a problem. So as an investment-driven bank or loan-driven bank, the bulk of your money should be coming from interest income. And that interest income has to be breaking down into sections. Like here on Access Bank, you will see the interest income on cash and balances, loan and advances to customers and to banks. You can see investment security. So for Access Bank to be an investment in a loan-driven bank, I mean, then you can see the bulk of its money should be coming from loan and advance to banks and loan and advance to customers. So when you add these two together, it should be far more than any other interest. But if the bulk of the money is coming from fees and commission, then it's a problem. So for Access Bank, you will see that interest income is sitting at 694.95 billion, and then fees and commission is 207. So that means a bank that relies on a loan business model to generate most of its flow from core operation. And what's the core operation? That's the loan itself. So interest on loan advance to customers or other financial institution, which is very okay. You can see that the bulk of Access Bank income or gross earnings is coming from this interest income. That means the bank is on track. That means the bank is actually earning most of its money from its core operation, which is okay. Now, earning from other sources fine, is okay. I don't have any issue. It's good for a bank to be well diversified, but then let that core operation also be generating positive cash flow for you. So that is also a pass mark for Access Bank. Now, the other one is Access Bank really profitable? Is Access Bank really profitable? Let's look at these numbers. That's very key for me. Now, the average cost of fund of Access Bank is 4.65. How did I arrive at 4.65? You take the average of the cost of deposit and cost of debt instruments, which is 4.1 plus 5.2, that will give you 9.3. 9.3 divided by 2. So the average is what we have as 4.65. That's the average cost. That means if Access Bank is able to add all its debts together, total debts together, whether it's from customer deposits or from the bond issues or whatever source is borrowing the money, the average interest is paying on that debt is 4.65. Now, remember, this money that is coming in is not coming in to sit in Access Bank coffers. It's also coming in to make more money. So what I do is I also look at how the bank is able to make more money with that money. So that is exactly where the net interest margin comes in. Because when you go to the bank to deposit, the bank is going to pay you interest on that deposit. Now, that deposit that is sitting in bank accounts, in your bank account, is also being given out to customers as loan and advances. And that's exactly what you have here, interest on loan and advances right here. Because the money is not going to be idle. The bank needs to make more money with the money. So whatever interest income the bank is generating on that money, we also need to compare that with the total amount that you have deposited in that bank. So if we go back to our income statement of Access Bank, you will see right here. Let's look at the income statement of Access Bank. So you see right here that we have interest income calculated using effective interest rates, interest income on financial assets. So this tells you what the bank is earning from that money too by lending it out. So what we do is we'll look at what the bank has earned on that money, less the interest expenses, which is what they paid you and I and other financial institution, which is 958. So the net interest income is what we are interested in, which is what 695,360. So they are all a million. So this most likely is 695.3 billion. So that is the net interest income. So there's something we call net interest margin. What is the net interest margin here? Now look at the calculation for net interest margin. Total interest income of the bank is 695, which is this, because you're not going to assume that the bank is going to make all this money. It should definitely pay out this. So interest income less interest expenses will give you the net interest income. So that's what I calculated as this in total interest income. So I can call it total or net interest income, just to make it easier for you to understand. So net interest income is interest and less interest paid. Interest earned from loan and advances to customers, less interest paid on deposits from customers or other financial institutions. So for Access Bank is 695.3 billion. Then there's what we call the interest-bearing assets. The interest-bearing assets are all the assets that actually bears interest, all the assets that generate interest income. And in the bank's book, these are the assets that generate interest income. First one is loan to customers. If the bank is giving you money, you're going to pay the bank interest, right? That's loan to customers. If the bank is also lending to other banks, that's loan to bank. You can see the figure. Loan to customer is 8 trillion and 37 billion. So if I go to Access Bank record, you will see that here all these numbers are on Access Bank financial statements. You can see here loan to customers. You can see 8037 right here. And then loan to other banks here. Loan to other banks is 880. You can see the same thing right here. Now, the third interest-bearing asset is investment securities. Investment securities. Look at it here. Investment securities here, this is it, investment securities, which is 5.32. So which is 5.32. So when you add all this together, loan to customers, loan to banks, investment securities, they will give you the total interest-bearing assets. Interest-bearing assets are all the assets generate interest income for Access Bank. So right now, interest-bearing asset is 14.2 as at December 2023. So if the bank is able to generate 695 billion as interest income, and the asset that generated this interest is 14.2 trillion. So by the time you do 695.3 divided by 14.2 trillion, then that will give you a net interest margin of 4.87. 4.87. Now, here's the rule of thumb. For me to know whether a bank is really profitable, its net interest margin must be more than cost of fund. Why there are no rules of thumb on exactly what the number should be, what the difference should be. But for me, I think as long as it's above it, I remember we're talking about trillion here. So it's not about the numbers or the percentage, but as long as it's above it, like for Fidelity, cost of fund is less than net interest margin. And for Access Bank, cost of fund is also less. Cost of fund is 4.65, net interest margin is 4.87. So that is how to check whether a bank is really profitable. Because the money you mobilize from your debt holders and your customers, how are you utilizing them? How are you deploying that money? If that money is not being used properly, then you are losing. So this is the figure that will tell you whether the bank is really profitable. That's why I have to stress this really profitable. It's not about the profit after tax, profit before tax, or whatever. No, it is actually by looking at the cost of fund of that bank and net interest margin. This is the number you would not see in a company's or in a bank's financial statement expressly. You have to do the calculation yourself because most times people pay attention to the gross margin, oh, increase from this to this, profit before tax, oh, 200 billion gains, and then, oh, the bank is profitable. No. To know whether a bank is really profitable, look at the cost of fund of that bank and net interest margin of that bank. So Access Bank is really profitable because cost of fund is 4.65 and the net interest margin is 4.87. Now, here's my point. The higher the spread, the difference between net interest margin and cost of fund, the more profitable the bank is. So if I'm going to compare banks right now, I look at banks that their spread, banks that their net interest margin difference with the cost of fund is wider than other banks. That's the bank that is most profitable. So don't look at how profitable a bank is just based on return on equity. Dig deep. Look at the key numbers. The key numbers here is the cost of fund and net interest margin. So Access Bank is profitable. Now the difference is around 0.22. Yes. So the spread. So we say the spread is 0.22. The spread is 0.22%. Now, you might look at this 0.22 and say, oh, this 0.22 is small. No. By the time you multiply this 0.22 times this trillion, you will know what the bank is generating as profit. So when you look at the profit, you will know that. Then efficiency ratio, how efficient is this bank? Now, efficiency ratio helps you check how the bank is able to manage its operating costs against the gross income. You know, as a bank, you incur costs, you pay salaries, you pay for maintenance, you account for depreciations and all that. So you also need to factor in these costs with what the bank is generating as total income or gross earnings. So for Access Bank, The efficiency ratio is sitting at 77%. Now, this is how I calculate efficiency ratio of a bank. Now, I go back to the income statement right here. So, first thing you want to do is to calculate the gross earning of that bank. The gross earning of that bank is the total income. So, that will be the net interest income plus the fees and commission. Now, these fees and commissions are what the bank earned from your all the charges, mobile transactions, all those extra charges you pay the bank, maintenance alerts, blah, 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 whatever charges they call it, that's fees and commission. So when you add the two together to this interest income, that will give you the gross earning of that bank. So now, what I do is to look at the operating earning, the operating expenses of that bank, not operating earning, operating expenses will be the personal expenses, depreciation, amortization, and other operating expenses. This is key. This is key because by looking at this, you can also tell whether the bank is able to manage costs. You can also tell whether inflation is actually hitting the bank because when inflation is high, the bank is going to incur more costs. Workers are going to be clamoring for increase in salary. So that also needs to be looked into. Now, it's not bad if a bank is increasing personal expenses, salaries, but then you also need to look at it as regards the threshold and know whether the bank is overpaying or whether the bank is actually extending beyond boundaries. So here, these are the makeup of the operating expenses of that bank. So operating expenses divided by the gross income, that will give you the efficiency ratio. Now look at the efficiency ratio of Access Bank. So 2022, efficiency ratio is sitting at 163%. This is bad. This is extremely bad. That's why I had to paint it red. And let me show you why I said it's not good at all in 2022. Now look at the personal expenses, depreciation and amortization plus operating expense of Access Bank in 2022, you see here 116. So let's even add it together. 116 plus 116621 plus you have your depreciation of 30,584 plus amortization of 13,839 plus the other operating expenses of 341,315, 341,315. That will give us, look at it here, 502,539. So this is like 502 billion naira. 502 billion. That's the total operating expenses, 502 billion naira. Now, look at the gross income of Access Bank in 2022. Now, when you add look at it here, net interest income, 161 plus 145. 161, 842 plus 145, 735. That will give you 307. Can you see? Can you see right here? Operating expenses is 502 billion, but gross earning is 307 billion. Now, yes, Access Bank might have declared profits in 2022, which is what? A profit of 152 billion. You can see profit for the year. Now, if you're not careful, you will just take this number and say, oh, the bank was profitable. But no, the bank was not profitable in 2022. What actually helped this number was the gains, fair value gain or foreign exchange gain, which was what 335. If you take out this number, this would have been negative. This would have been a loss. So Access Bank would have declared loss in 2022 if not for FS gain. That's why, for me, I just think I hope CBN will be able to find a lasting solution to the FS gain. Let's know the companies that are really profitable in the market or not. This is very important. This is very important. So if you had if exchange rate had been stable in 2022, Access Bank would have recorded a loss. It would have recorded a loss, and that wouldn't have been a good thing for the bank. Why? Because the bank's efficiency ratio was 163%. That means the total operating expenses were more than the gross income in 2022. Now, let's now look at the numbers in 2023 to now say, look to now finally certain the position of the bank. So let's do our look at our efficiency ratio in 2023 again. Now, personal expenses, 167 plus 45 plus 18 plus 465. Right here, that will give us 697 billion. And then if you now add the bank's gross income in 2023, so that is what 555 plus 207. That will give us an average of 903. So let's look at the number again. 555,832 plus 20, sorry, not 207. Yes, let me check. 555,832 plus 207,781. That will give us 763. 763. Sorry, let me look at how I arrived at 903.41. Okay, so I've looked at the figure again. Now, the total operating expenses of this bank is 697,531, and then gross income 763,613. Look at the numbers here. So the gross income is net interest income right here, 555 here, 555,832. So 555,832 plus 207,781. That'll give you 763,613, which is 763,613. That's the gross earnings of that bank. This is it here. And then the operating expenses of the bank is 167,45,18,465. So that gives us 697. So you see here that the efficiency ratio of Access Bank is 91, although we saw a significant improvement from 163 to 91%, but then it is far higher than my average threshold of 40%. So if you go by this, you will see that, and then look at the return on equity of Access Bank, 28%, quite okay. Profit for the year, 619, and then total equity, 2.1 trillion, so 28%. But here's my comment. Why Access Bank did improve on its efficiency ratio amidst rising inflation? So we can explain this massive increase. Look at the personnel expenses of Access Bank. We had 116 to 167. Now look at the other operating expenses. We saw a jump from 341 to 465. 341 to 465. And then that actually accounted for that jump. So why Access Bank efficiency ratio, sorry, did improve on efficiency ratio amidst rising inflation? That improvement I am talking about is this particular improvement from 163% in 2022 to 91. So that means the bank is looking to cut cost, and that is reflecting in its 2023 financial statements. But then I think the bank need to achieve the below 40% targets from 91%, which is still considered high. So efficiency ratio around 91% is considered high, and that bank need to work on its expenses. We need to work on its expenses, because I like efficiency ratio below 40, but then anything below 50 is still okay, fair, but it shouldn't exceed 50 to reach 91%. So that means Access Bank is actually battling with increasing costs of operation, and that needs to be worked on. Because if you take out the fair value gain here of 628 and take out the fair value gain of 335 on Access Bank record, this would most likely not be good. So what has been actually helping this profit for the year that you're seeing right here is exchange rates. If you take out 621 from this 619, it's already a loss. If you take out 6335 from 152, it's already a loss. So it means that Access Bank is being supported by FS gain. But then, is that bad? No, it's not bad, because that's the essence of diversification. I think Access Bank's strength is actually in diversification. The bank is able to diversify across across region, different continents, and that is actually helping it to generate this FS gain or loss. Because if the bank had been concentrated, assuming Access Bank is in Nigeria alone, I think Access Bank would have recorded a loss. So the management might have seen this. That's why they keep expanding. That's why they keep investing in foreign acquisition, acquisition of foreign subsidiaries. So you will see why Access Bank is always acquiring banks in different continents or banks in different countries. Why? Because the bank's strength is in its acquisition, because that acquisition is helping it to generate FX gain. Because if you look at it over time, Naira has been depreciating against major currencies. So Access Bank is leveraging that long-term trend to grow its revenue. So if you look at it, you might probably assume, oh, it's actually not a good thing, but the bank is actually turning this problem into opportunity. And how it's turning into opportunity is that it's investing in foreign subsidiaries. So when you hear Access Bank acquire, Access Bank acquire, Access Bank acquire, note that this bank is using that to drive this particular line item, because this line item is very key for the bank to sustain its profit. Until the bank is able to cut down its efficiency ratio below 40, it has to continually leverage on foreign subsidiaries to be able to grow their bottom line. So that's my key observation on Access Bank. So that is not bad, because foreign subsidiaries, foreign acquisitions, and foreign associates for me is good. That's how a smart manager thinks. That's how they think of diversification. UBA is also doing that too. So don't see it as a bad thing. But then I think the bank just need to work on its of efficiency. The management needs to look at how it is spending to ensure that it's able to drop efficiency ratio below 40%. But then it shouldn't do that at the detriment of its staff, because at the end of the day, if you certify your staff and they're not able to get paid, morale will go down. That would also be a problem. So I think management needs to work on this part. That's one area I think management need to work on. But every other thing is perfect. Every other thing is okay. But like I said before, it's not a major problem, because as long as the bank is diversifying, that means interest, foreign exchange gain will continue to drive the bank's earning in the future, which is not a bad thing, because Naira to dollar has been bad. Like the trend has not been encouraging. So any smart business will look to earn in foreign currency to help to cushion the effect of that devaluation. So that's what I think Access Bank is doing. You can see how the numbers are revealing certain things about a bank. You really don't have to be an insider. You don't have to know the MD. You don't have to know the CFO or the HR manager or whoever is in charge of Access Bank to probably get an idea of what the bank is doing and where the bank position is right now. By looking at the numbers and going deeper like this, you'll be able to tell whether this is a bank you want to go in or not. But then I think this is okay, this is fine. As long as it's helping to keep the bank afloat, then that's for me, it's okay. Because if you look at the long-term trend of Naira to dollar, it's still most likely going to go higher. So that's also going to be positive for Access Bank in the long run. Then is customer confidence improving on Access Bank? Like we shared earlier, total deposits on Access Bank is around 19.7 trillion naira. So average growth in customer deposits in the last 5 years is around 72%. And then projected deposit by the end of 2024 is 34 trillion. So I am projecting 34 trillion for Access Bank by the end of 2024. So look at Access Bank um, historical record on Capital Q. People have been asking me, where do you get your historical records from? I get my historical record from Capital Cube. So here is the total deposit on Access Bank. You can see deposit from 2019 into trailing 12 months right here. 5.4, 6.5, 8.3, 11.3, 19.9, and 25. So the bank is also doing a good job by hitting new high on its deposits year on year. So just like Fidelity Bank has been growing its customer deposits, Access Bank has been doing the same thing as a loan-driven business. And then if a bank is able to grow its deposits as a loan-driven business, then it means that the bank is generating cheap funds. And that's good. That's positive for the bank in the long run, because look at the cost of fund on debt instruments. That's 5.1. Cost of fund on customer deposits is 4.5.2, sorry. Customer deposits is 4.1. So which means the bank will do anything possible to be able to encourage people to deposit with them. So don't be surprised. Access Bank might be investing in assets that would, or activities that would drive customer deposits. So I'm projecting 34 trillion for 2024. So that also means the bank would definitely give out more loan, which is also positive for the bank's bottom line. So that's customer deposit for Access Bank, and it's improving. So what's my fair value? What's my average forecast on Access Bank? So I'm using the PE ratio to project this number. I'm using the PE ratio to project this number. Now, the earnings per share trailing 12 month of Access Bank is 19.6. The PE ratio trailing 12 month is 0.98. So what's the current market price of Access Bank? Access Bank is 19.4. So if you do 19.4 divided by 19.6, that gives me 0.98. So PE ratio of Access Bank is 0.98. In short, this is the lowest in the industry. This is among the lowest in the industry right now, because if you look at the PE ratio of the banking sector in general, you see that the PE ratio of Access Bank is 0. You can see here, while the industry itself is 3.5. So this means that Access Bank is relatively cheap compared to other banks. Access Bank is one of the lowest. So meaning that the people are here to catch up. Access Bank is here to catch up with its real value based on what we're seeing right here. So that is what that PE ratio means. It means that investors are paying 0.96%, sorry, 0.96 times the earnings of that bank. Now, my average EPS forecast in the last 5 years has been 48% on average. If you look at the growth, EPS growth of Access Bank in the last 5 years, EPS growth of Access Bank in the last 5 years, you can see here 2.7, 2.9, 4.5, and a dip to 4.3, massive increase in 4.2, then trailing 12 months of 19.6. So average growth is 48%. Now, if I'm going to project Access Bank year end using the 48%, then I'm expecting Access Bank projected EPS for 2024 to print at 25 naira. Current one as our Q1 is 19.6. So end of 2024, I'm projecting at least 25 naira for Access Bank. So if Access Bank is going to deliver 25 naira EPS for 2024, then by looking at this PE ratio of 0.96, that's what investors are paying right now for the company share, then Access Bank share price should most likely be trading at 24.5. 24.5. And 24.5 minus 19.4 will give me 5.1. So 5.1 divided by 19.4 market price. So upside potential of Access Bank minimum is 26%. 26%. That's the upside potential of Access Bank, 26%. So if you're buying Access Bank right now, you're looking at a minimum of 26% return based on this projection. If Access Bank exceeds 25 naira in 2024, then the bank upside might be far more than 26%. So my upside potential on Access Bank is 26% using the PE ratio. There are different ways to value company stock, but I'm just trying to use different model to value company stock. So remember, this is just based on my own personal research. Please do your own fair value calculation and do your own due diligence. So if Access Bank fair value or upside potential is 26%, now what is our technical analysis saying? Remember that I said something earlier on. We're going to look at the detailed fundamental analysis and technical analysis. So from our fundamental and numbers, Access Bank should be fairly valued at 24.5 if the bank delivers 25 naira by the end of 2024. Now, what is the technical analysis saying on Access Bank? So let me quickly show you something on Access Bank. Now, Access Bank stock closed yesterday section at 19.4. Price has been trading below the counter trend line from a high of 30 naira attained in January 2024 and also retest in April 2024. That's at 25 naira. I will show you that on chart. Now, with the bank stock gradually rising, with the bank stock gradually rising above the trend line, I want to see a comfortable close above 20 naira to confirm the entrance of new buyers in the market. That means if Access Bank is to trend higher, if Access Bank is to move into a trending stage where we can say, oh, Access Bank is actually in a bullish state right now, it has to close above 20 naira. So here's Access Bank on charts. Now, before I mention or talk about this counter trend line, let's go back to similar play in the past where Access Bank followed the same counter trend line, broke out and delivered massive return. So that's between July to November. So you can see how Access Bank hit a new high in July of 19 naira, pulled back, touched another high of 19.4 pullback. You can see how it respected this counter trend line here. First touch, second touch, third touch. So now a breakout above was a massive opportunity. This was a huge opportunity for anyone to jump into Access Bank at 18.7 to 19. You can see how the bank stock rallied from 17 to 18 to reach a high of 30. So if I do 17.8 or averagely 18 to 30, that will be 12 divided by 18. That means the bank did an average of 66% return between November 2023 and January 2024. Now, the same pattern is playing out right here. Look at how the bank is trading below the counter trend line. First touch here, second touch here, and then you see how the bank is gradually breaking out from that counter trend line. But then there is a minor resistance here, which I've marked. There's a minor resistance region here, which means I want to see the bank break out of 19.4 to reach at least 20 naira. So if Access Bank enters 20 naira region, we could see a retest of previous high. Now, remember, our fair value calculation is sitting around 20. Let's look at the slide again, 24.5. So our fair value calculation on Access Bank is around 24.5. And my 24.5 is around here, this region. 24.5 here, around this region, right here, which is the previous, you can see here, which also correspond with one of the major key level at the trend line. So if Access Bank breaks out of 20 naira, then we could see a retest of its fair value of 24. And if it breaks out of 24, we can see a retest of previous high. Now, this will most likely happen if Access Bank is able to beat expectation, if analysts project that Access Bank might surpass this 24.5 naira, 25 naira 2024 projection. So if Access Bank is going to beat 25 naira, then Access Bank stock price might clear this fair value right here, which is based on my projection, and then rally to previous high of 30. And if you rise to previous high of 30 from 20, that's 10 divided by 20, that's like almost 50% upside potential. So if Access Bank impress the market, beat expectation, surpasses my 2024 projection, then we could see a rally to 30 naira. So this projection is just based on my modest estimate. I don't want to over exaggerate, right? But if Access Bank delivers EPS far above 25 in 2024, then there's nothing stopping the bank from rallying back to 30 naira. So that's my projection of Access Bank. So if you're asking whether Access Bank is a buy right now, I think this analysis is something you need to watch again, take your buy or sell decision. But then there is actually huge upside potential of Access Bank if the conditions I'll share right now eventually plays out. First one is a breakout above 20, which should open the tap for a 24 naira region fair value calculation based on my expectation of 2024 EPS. But then if the bank continues to impress the market, then we can see further rally to 30 naira, which is an average of almost 50% plus from the current market price. So I hope you got value from this section. I hope this video makes a lot of sense to you and all that. So if this is the first time you're watching, like I said, you can like this button, like this video, subscribe and turn on the notification. It's very important. Look at this kind of video right now. You don't want to miss out. You want to be among the first to get this kind of analysis. So kindly hit the subscription button and turn on the notification bell right now. And if you're looking to join our community, you can go to globefolio.com. That's our community. Go to globefolio.com, click on this Portfolio Investing Club, register, and in your registration, you would be able to select subscription plan. So here are our subscription plan on Glofolio. We have the 60K plan for Nigerian stock, 100K plan for US, and then 150K plan for the hybrid. Hybrid gives you access to both markets. And these are the things you get access to when you join our community. So if this video is okay and you like this video, drop a comment. I want to read your comment. I'm interested in your comment. Yes, I want to read your comments. I want to read your feedback about Access Bank and what you think Access Bank will be worth by the end of 2024.